Good morning, everybody. It's Monday, December 2nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down 3/4 at 422 1/4. January soybeans were down 5 at 984 1/2, and December Chicago wheat was up 2 at 534 1/4. This morning, the USDA had an export sales announcement of 134,000 metric tons of soybeans to China, and that was for 24. Good morning, guys. Hope everybody had a nice weekend. On the heels of Friday, we had obviously first notice day there. Huge export sales for soybean, the soybean complex, and certainly the oil complex. Ben, maybe just a few thoughts to get us going this week, and then we'll throw it around the room.
Yeah, on Friday we saw this big soybean sale. We talked about it before the opening. The markets had a proclivity to be stronger initially out of those and sell off, and they wasted no time with that same MO. And you don't see many brackets like that where you open up and 16 cents lower in 15 minutes from the highs of the day. So there were definitely people lined up to sell beans. I think part of it is soybeans have traded this range out now for about 8-9 days, and everything that's here is still negative from a trend perspective. Below the 20, below the 50, below the 100, and the 200-day. Corn, on the other hand, found some buyers after the pressure from first notice kind of waned. I think the next couple of days will be a little more telling for the corn market. It's vacillating between its 50 and its 100-day moving average right now, and I think corn's looking for direction still in a kind of a wider range. It did break down the trend line support that it had going back, I don't know, let's see, all the way back to mid-October. So probably a retest of where it broke out. Wheat's the one that just continues to be very heavy. It's a market that probably has some underpinning friendly tones, but for now the trend is lower, and they seem to weigh on it pretty heavily. So corn looking for direction, soybeans feeling like everyone wants to sell it on a rally. The traders are just moving it around within a range, kind of in both corn and beans, with the corn looking a little bit more promising just to the naked eye. That could change really quickly. 427 and a half, the 100-day moving average. In my mind, I look at trends as, is it below the 200? Is it below the 20, the 50, and the 100? And if it's below all three of them, you're catching falling knives. And we're just vacillating here. This will be the fourth day in a row trading between the 50 and the 100-day. So,
very good. And we Agro Consult, which is Brazilian consulting group, came out with an estimate of 172.2, and our friends at Bourbon Brown, I guess, just finished a tour around some producing states in Brazil, and he's hit 175 or 177. So obviously pretty friendly in the production side there. Justin, I mean, if realized, 172.2 would be surpass the all-time high by quite a bit. So we've talked about it a number of times, kind of some of the headwinds that soybeans have here, in spite of the good business that we're doing.
Yeah, I mean, I think we're trading that for sure. I don't see anything very exciting in the soybean complex except for soybean oil, which is the weakest one. They've been pounding it recently. It's the cheapest oil in the world. I think that's the one. I sound like a broken record, but that's the one thing that is probably really below the cost of production. I mean, it's the cheapest oil in the world. We've seen oil stocks around the world decrease. We've been burning it for biodiesel, both here in the U.S. and Europe, Brazil, China now, Malaysia, and name a country. They're all using biodiesel or increasing their mandates. So, to Ben's point, it's below all the moving averages. So I think the funds are happy sellers of it, but by far the cheapest oil in the world. So that's the one thing I see. The second would be corn, as far as competitively priced. I mean, even with a strong dollar, we're continuing to sell corn. We're continuing to sell oil. We're continuing to sell beans. So, this is a tough time of year between Thanksgiving. I think we talked about this last week, but between Thanksgiving and Christmas, it's a really goofy market generally. Hard to have a strong opinion, but we are breaking into areas that are finding demand, and rightfully so. I mean, if we do have a 175 plus soybean crop in Brazil, we're gonna have to be cheaper and keep doing demand. I think over the weekend I read about raising the corn estimate out of Brazil. We haven't even planted the safrinha crop. I mean, that's kind of crazy to me. We keep raising all the Brazil soybean crop's going to be X and the corn crop's going to be Y. The biggest part of the Brazilian corn crop is the safrinha crop. So I don't know. I think we're probably getting a little ahead of ourselves. We're probably a little worried about tariffs, all those kinds of things. Not that I can't end up being right, but I am just not a huge bear here when we're breaking into demand. The time of year, all those kinds of things make me just kind of pause a little bit as far as being super bearish.
Yeah. I think you bring up a good point, like just moderating of where you're at. I don't think this is a great time to stick a huge flag in the ground on what you think the market is going to do. It's interesting to note that beans are hovering 10 cents off their recent lows, and we haven't seen we've seen managed money really be kind of, I would say, over the last 2 months, 3 months, kind of the same as corn. They've reeled back in most of a pretty big short position. They still hold a 50,000, 55,000 short, something like that. And it goes, you listen to narratives on social media and people say things like, well, is this priced in yet? Or is that priced in yet? And I think things are priced in every day, right? I don't think we know anything new today that we didn't know 2 weeks ago, that we didn't know for the most part have innuendo on prior to the election. So I think you got to be, things can change in a hurry. The mentality for sure of the day trader, the speculator in soybeans is going to be to sell rallies until they're proven wrong. And, corn is one that you have to give it some respect here, but it's got some things to overcome if it's going to push higher from here. Mm-hmm. So,
yeah, I agree. It's a funny thing talking about like trading, and what people like to get on the bandwagon late and then pretend it's a new thing. Like, hey, no one's thought about a record Brazil crop, or no one's thought about, China demand being down, or no one's thought about it. You need to convince yourself of a reason to get on the bandwagon after you've missed the move. And that happens a lot in all markets, on the bull side or the bear side, So well, right now, if you go on Twitter, it's, people are just figuring out Bitcoin's a good investment at 100,000, So Bitcoin's a good investment, and being short beans at 980 is a good investment too. So
yeah, I think that's a good observation, and I'm going to go back to the basics of trading here. Until that seller gets hurt on a rally, they're going to keep doing it. And I think fighting any market during December is going to make for a not very Merry Christmas if you're stubborn. So just let it do what it's going to do here.
Well, very good. Ryland, it was interesting to see last week with cattle slaughter down and cash continuing to rally. Kind of a disconnect a little bit there, but over the weekend, good communication with Mexico seems like it's kind of eased some tensions in the hog complex. So what do you got for us to start the week here?
Yeah, no, I think that's right. I mean, like, it was a shortened holiday week, so I mean, I don't think the kill numbers are that big of a shock here. I mean, the Packers definitely came after cash though pretty aggressively, kind of before the holidays. So we saw cash $4 higher on the live side, $5 higher on the dress side. So I mean, like, it just keeps on going up here, while beef market kind of stabilized here on Friday after the holiday, just a little bit mixed. So overall, I mean, yeah, it seems like, we had a little bit of a consolidation kind of trade. I think just, a lot of times you get into December, you usually see maybe a little bit of liquidation, just because it feels like you're past the holiday, you're past a lot of the, procurement time frame. Packers are maybe bought a little bit further out. So we'll see. You probably seen a lot of good news on the cattle side of the market. Plus feeders rally to a new high. Commitments still going up here, about 1,000 contracts on Friday. So it seems like the feeder market just hasn't stopped. But yeah, with the president or the president coming into office and Mexico starting these talks, there could a little bit of the fear trade may start to dissipate here, both in the feeders and on the hog side. I mean, there's still the import restrictions from the screwworm, no real updates there, but that still is, going to affect things. I think the market's kind of traded a lot of that news, but still wants to see just how things progress overall, if that's going to be a little bit longer standing. Otherwise, on the hog side of things, managed money actually sold out of some contracts here, so it's kind of interesting to see, just because it seems like cash market on the weaker side. We did see bellies up $7 on Friday, but I don't think the market's going to read that much into it. Just feels like we're pretty elevated here, and if things start to, if any of those tariff negotiations start to dissipate, it feels like managed money is going to get caught pretty long up here. So something to keep an eye on. I think producers need to stay hedged pretty aggressively at this point, just going out at least into the first quarter, maybe even eyeballing some of those summer contracts that are hitting over $1. So something to keep in mind, but wouldn't expect kind of too much craziness today. So we'll see how that shakes out.
Very good. Appreciate the update. Before we get going here this morning, wanted to point out next Wednesday, December 11th, we've got a couple of exciting additions of the War Room that we're going to have live at 10 o'clock Central. For AgYield specific clients, we're going to have a crop insurance discussion. And then at 12 o'clock Central, we're going to have an open forum in the public preparing for the 25 financial landscape with our AgYield Financial Services group. It's going to be exciting. We got a lot of things that we're going to touch on the crop insurance side specifically. It's going to be exciting. We're going to talk about government payments or government programs, and how those integrate into making your crop insurance decision and some of the products that we're looking at here for 25. So be sure to put that in your calendar. We'll have updates, registration information as well. So that leads me into throw us a subscribe. That'll certainly keep you up to speed on all the things that we're doing, like next Wednesday. Appreciate everybody that supports the show, tunes in on a daily basis. So throw us a like or subscribe. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a good start to the week, and we look forward to talking to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.